Today we're going to talk about group health insurance. If you're a business owner, this episode's for you. If you work for a company that provides group health insurance plans, you also want to pay attention to what I'm going to share today. Before we get started, make sure you like, share, and subscribe. Hit the button below. What is group health insurance? Well, for a business owner, you might be frustrated that your employees are not staying. You can't retain them. Why? You're not offering them benefits. Additionally, you're having trouble attracting talent. Your Indeeds are not getting any hits because they know you're not offering group health insurance. So I want you to pay attention to what goes on here in the group health space and why you might want to consider offering benefits for your company to attract and retain your key talent. If you're an employee that gets group plans, pay attention to what's going to happen here, because every year you go through open enrollment just like everybody else, and you have to select your options and your plans. So let's break down some of the fundamentals of group health insurance. By the way, did you like and subscribe? Let's keep going. All right. In a group health plan, you get MEC. You get MEC benefits, minimal essential coverage. If you checked out our previous episodes on Obamacare, we talked about MEC and minimal essential coverages. So you're going to find that your group health plans are going to be very aligned with what the Obamacare platform looks like. That means that your annual wellness exams, mammograms, colonoscopies, whatever you need in your wellness care is provided with no cost, no deductible, no copays, all provided to you automatically. Now, in a group health plan, you still have to deal with things and be knowledgeable on your deductibles, your copays, your coinsurance, and your max out of pocket. For those who didn't watch the previous episode, let me give a quick summary of that. Everybody has to deal with a deductible. That's your patient responsibility before the insurance actually starts to kick in. Those plans could start at $0. They can go all the way up to $9,000 or more. So your company options are going to provide you where your deductible levels are for you as an individual, as well as your family. Once your deductible is met, you now move into the second ladder, and that's your coinsurance. Coinsurance might be 50-50. Insurance company's going to pay half of the bill, you're going to pay half of the bill. Well, how much of that are you going to absorb? Well, that's the third tier, and that's your max out of pocket. So if you have a $9,000 max out of pocket and had a $30,000 appendicitis procedure, you're pretty much going to hit your max out of pocket. You'll pay your coinsurance first. You'll pay your deductible first, then your coinsurance, and then your max out of pocket, and then you're done. So God forbid you had some really expensive procedure, maybe heart related, God forbid you had cancer treatments. Those bills might be $400,000, $500,000, $600,000. You're not on the hook for that. Whether it's Obamacare or group, your max out of pocket will always apply. Even private. We had episode 2, we talked about private. Max out of pocket for that 12-month window is always going to be your maximum exposure. Don't forget, every year you start all over again. All right, so we talked about max out of pocket, we talked about coinsurance, deductibles, and copays. One of the benefits of being in a group plan is that your employer provides for 50% of your personal insurance cost. So as a business owner, if you're entertaining getting insurance for your company, understand that your financial responsibility is to provide for 50% of all your staff. This is why a lot of people don't do it, because they don't want to have that financial obligation. Now, if I'm the employee, it's not covering my kids, it's not covering my significant other. I have to pay for that out of pocket. So they have their 50% as well as any family expense. So nobody's saying it's free insurance to you. That's going to be up to your boss and the company of how much they want to provide above and beyond what's required. All that's required is 50% of the lowest priced option. You can pay the difference for higher priced options. You're going to pay the difference for adding your family or kids. Does that make sense? If not, put some questions in the comments and I'll be able to follow up with you directly. All right, so your employer is going to pay for 50% of your benefits. You're going to pay for your family. You're going to pay for your kids. What else is available in a group plan? Why are group plans so desirable? Well, you can get dental plan coverage, you can get vision coverage, you can even get disability and guaranteed issued life insurance. This is important for people who are uninsurable due to previous medical issues. They can pick up group life and group disability coverage in their employer plans. This is why people, business owners, listen to me. This is why people want to take jobs that are out there offering benefits because of things like this. They can't get life insurance somewhere else. They can't get affordable health insurance somewhere else. They want jobs that are going to provide these things. So if you want to get that talent, you need to think about putting a group plan in place. Last component here we want to discuss is there is an annual enrollment based upon when the company starts their plan. They always give their employees 30 to 60 days, new prices, new plans, new options. So there is an open enrollment window. It's not the same as Obamacare. It's based upon the company's fiscal year and when they implemented their plan. So if you started your plan in May, your open enrollment's going to be in May. Okay? But you always have that 30-day window to go in and review and make changes to your plan. Once that window closes, your options are stuck for the next 12 months. All right? Once you're done with annual enrollment, that's it for the next 12 months. You can't make any changes to your plan. Last but not least, we're going to talk about COBRA. When you leave your employer, what happens in the portability of that insurance, that's called COBRA. We're going to do a bonus episode on COBRA, so make sure you like, share, and subscribe, and we'll bring you that episode next time. I'm your host, Bruce Weinstein. I hope you enjoyed this show on group health insurance. Business owners, hit us up. Make sure you have the programs in place that you need to keep your key employees here and help you get the talent that you want. We'll see you next time.